Hi, this is Zach Mead from Zach's Traders Cafe with a look at the major markets on Monday, the 12th of September, and all change here really as far as the technical picture is concerned for equity markets. FTSE 100 in a difficult situation really at the moment with this resistance line break of a triangle from the beginning of last month. The obvious target there would be August support at 66.15. And it's difficult to see how it'll find leading UK stocks to find support above that. Below that, we're looking at the old April resistance zone at 64.27 as the place to finally bottom fish this market. Onto the DAX, which basically has given us quite a strong technical signal for the start of this week. We had a gap to the upside in August, gap to the downside to start the week, the 12th of September, really, and that's a double top and an island reversal in one. End of day close today, back below the 50-day moving average at 10,336, would lead us back down to the 200-day moving average at 10,043 as soon as the end of this month. The US markets, which were further hurt in the wake of the Clinton fall, we've got the topping out there with the triple resistance above 18,500. Looks as though this market will find some support around the 18,000 level, but really it looks as though it's the 200-day moving average at 17,565, which is the real support area as it was in June, and probably the safest place at this stage to think about going along. Ahead of that, there isn't much incentive to take the plunge. For the S&P, similar position to the Dow, breaking the 50-day moving average 2163 very, very easily. And although there is some notional support at former resistance between 2120 and 2130, this looks as though it is really ready to head back down to the 200-day moving average area at 2057 before a sustainable rally might then kick in. For the Nasdaq, we'll manage to close below the 50-day moving average of 47.01 at the end of last week. No real obvious place for new support to come in ahead of 45.74, which was the old April peak, and that could be hit as soon as the next couple of weeks. RSI 36 are not oversold at all on that market. For the currencies, which is a slightly happier picture, more stable at this stage, we've got the pound in a range really between the 50-day moving average level 131.46 and going up towards 135 post-June resistance. Really waiting for a break of that and to trade it as a range. RSI at 53, so the bias is to the upside. On to euro dollar, and here you can see that we've had the rebound at the beginning of the month off the 50-day and 200-day moving averages around 111.40 to 111.50. Support on Friday above the 10-day moving average at 112.02, and at least while we're above the 10-day line, we can notionally target towards 114, which is post-June resistance. On to dollar yen, and here you can see how there's been remarkably, surprisingly stable moves over the last couple of sessions, given that normally equities down means stronger yen and fall in dollar yen. But at this stage, we're above the 20-day moving average level at 101.69, and while there's no intraday close back below that, there's still a chance of a range trade between 102 and 104, which is an initial September resistance. Finishing off with gold. Here we've got limited support here around the 10-day moving average level at 1327. Overall, looks like a range, really, nothing worse or better than that. We've got a support line there from July running towards 1300, and the top of the channel 1350. So really, that's the range to trade. End of day close above the 50-day moving average at 1337 would be the first decent buy signal, technical signal for this market. That's it from me. More updates at the same time tomorrow.